In 2008, the world was hit by one of the worst financial crises in modern history. The crisis affected the lives of millions of people, leading to widespread job losses, foreclosures, and a sharp decline in global economic growth. But how did this crisis happen? The root causes of the 2008 financial crisis are complex, but some of the key factors include lax regulation, risky financial practices, and the overvaluation of assets. Many banks and financial institutions took on too much risk by lending money to people who could not afford to repay it, creating a housing bubble that eventually burst. When the housing market crashed, it had a ripple effect throughout the financial system. Banks and other financial institutions that had invested heavily in the housing market found themselves with significant losses. Many of these institutions had also invested in complex financial products that were based on the value of mortgages, making the losses even worse. As banks and financial institutions began to fail, the crisis spread throughout the global financial system. Governments and central banks intervened to prevent a complete collapse, but the damage had already been done. The crisis led to widespread job losses, foreclosures, and a sharp decline in global economic growth. One of the biggest lessons learned from the 2008 financial crisis is the importance of strong regulation to prevent risky financial practices. Governments and central banks have taken steps to strengthen regulation and oversight of the financial sector since the crisis, but many argue that more needs to be done to prevent another crisis from happening in the future. Another lesson learned is the importance of transparency and accountability in the financial system. Many of the complex financial products that contributed to the crisis were not well understood by regulators or investors, leading to significant losses when the housing market crashed. In conclusion, the 2008 financial crisis was a complex event that had far-reaching consequences for the global economy. While many of the factors that contributed to the crisis have been addressed, it remains important to continue strengthening regulation and oversight of the financial sector to prevent another crisis from happening in the future.